Hello, this is Gary Dugan from the Global CI office with another review of the markets in just the past week. So let me start by sharing with my Bloomberg screen to pull out some of the main movers of the last week. And I thought this was maybe a good way to start. There is a broadening of the equity market performance, and this you're seeing on the chart here is the performance of the S&P excluding the Mag 7. And you can see this small increase that we've seen over recent weeks. So it's now up about 5% in relative terms to the S&P 500, suggesting that not just a broadening, but I think there's better themes now below the tech sector, given the tech sector has relatively calmed down and trading sideways with no spectacular good news. Another feature of the markets has been the weakness of the dollar, and I'm showing on this chart two lines. One is the Swiss franc, and the other one is the performance of the Singapore dollar. And both with a declining line, we're seeing an appreciation of what is seen as safer currencies. Indeed, quite a marked rise in these currencies and their kind of relative strength to the dollar, very much underpinning this idea that people are looking not just to diversify within the US market, but also diversify internationally. And we're seeing that in terms of broad market moves. If I look at the equity market moves in just the last 5 days and just focus on Latin America, you can see these very strong performances last week from places like Brazil and Chile, Panama, Argentina. I know that many of these countries are in the eyes of the US problematic, but these countries are starting to turn around. The big macro picture here is that significant performance that we're seeing from commodity prices, and these are commodity countries, and we could easily see some further outperformance of these markets given their relative low valuations. But just switching back to what was happening at a broader level last week, over the last 5 days, US market really kind of stood still. You can see the Brazilian market there just as a standout within the Americas. Europe quiet, and out in Asia Pacific, yes, we've got a bit of recovery going on in some of the markets this morning, here Monday morning in Asia. But the Nikkei down, and a little bit consolidation after some very sharp gains that we had since the beginning of the year. If I just change this to year to date, you can see this very strong performance from the Nikkei, up nearly 7% in dollar terms. So focusing now just on what to expect from this week, it's all about the Fed meeting. There are some few data points around the US that I'll come on to in a second, but by and large, all the focus on that meeting, not really any discounting as we see this number here of a rate cut that would have to say -1 for there to be an emphatic bet on a rate cut at the meeting on the 28th. And indeed, even if you go down this list here, you're not really seeing an emphatic bet by the market at this point on a rate cut until July, which is when a new chairman would be taking over. So the data so far in the United States is really talking to a tone which is positive. We're seeing last week a GDP report that was stronger than expected. We're seeing probably retail sales numbers that are possibly going to accelerate as these tax breaks start to come in. But in terms of the calendar through the next week, yes, durable goods preliminary numbers 3.8%, a good number, which is again reflecting a strong trend we have at the moment in capital investment. But the key events of the week, that Fed meeting, not going to spring any surprises unless we get some dialogue from the board that says that we're minded to cutting interest rates sooner or later, or they're just their take on where economic conditions are at the moment. So to summarize, I'd say we're going to continue to see a very strong performance from the precious metals. People still want to have that insurance policy in their portfolio. There has been a bit of mayhem in the geopolitics over the last week with the Davos and the tragic events in the United States. This is just all adding to the, call it the background noise, which is making people somewhat nervous. But I do still believe that the US data will be robust. That means limited rate cuts in the first half of this year. But good news on earnings. But meanwhile, a diversification of broad global portfolios to other parts of the world outside the United States with small cap in focus and Latin American countries, but not forgetting we still think a good, solid story for Asia. Thank you very much.